Okay, what's going on, guys? Hope you guys are doing great and hope you all are doing amazing. Okay, on this video right now, we're going to talk about how to step-by-step guide on how to mark out higher time frame key levels. Okay, so we're going to talk about how to practically and systematically map out higher time frame key levels. So at the end of this video, you'll be able to understand how to systematically map out higher time frame key levels. Okay, so I know that the content you're going to see in this video, you will not be able to see them anywhere else. Okay, you won't be able to see them anywhere else because these are things that came through inspirations and through constant learning. Okay, so let's go straight to the point. So daily, weekly key levels, support and resistance and weak importance. Now, a guide to identify potential reversals and price reaction. So the most important thing about this video or the takeaway from this video at the end of the video is that you'll be able to understand how price reacts from higher time frame key levels. Okay, you'll be able to understand and appreciate how price reacts from higher time frame key levels. And you know that Harmonic is all about reversal trading strategy. So if we can be able to systematically map out these higher time frame key levels and then have any kind of harmonic setup in alignment with that key level, it gives us high probability trading setup. Okay. So key levels overview. What are key levels? These are areas of where price or market reacts noticeably. You see them on the chart. You see if you go to the higher time frame, even on the lower time frame, you always see those levels where price reacts from. So these are all called key levels. Okay. So they often act as magnets, barriers, or reversal points. So they act as magnets. Magnet is something that attracts something. Okay. So whenever price is moving, price will always most of the time, push to these key levels and then probably consolidate, react, or probably reverse. So they derive from previous price behavior or daily and weekly time frames, of course. So they are derived from previous weekly price records. Okay, so for a new weekly, daily, hourly key level to be formed, it has to, react from previous price history. Okay, so now daily key levels, why do they matter? They use by intraday and swing traders. Okay, so some of the traders they actually draw their market bias from the daily time frame, more especially for intraday traders as well as swing traders. So they draw their the bias for the particular asset based on the daily key levels of support and resistance and all of that. They show short-term momentum and interest zone. Okay, so they actually show short-term momentum, change in momentum, change in price, and they show short-term reversals or short-term reactions from support and resistance. Okay, but then we're looking at weekly key levels. See, they represent medium-term institutional activity. Okay, after the monthly, you have the weekly, and then you have the daily, and then the hourly chart and the minute chart and the rest of them. So from the monthly to the weekly, these are levels where institutions are looking at for price reactions because they are looking to hold trade for a very long time. So they are looking to capitalize on the bigger move, right? So their medium-term institutional activities are often stronger and more respected than the daily levels, of course. So the weekly levels are more stronger because on a weekly candle, it takes about 5 to 6 days for a weekly candle to form. So it's enough price history on a one single candle. So it's a very strong level, and it is most of the time being respected more than the daily key level. Okay. So support and resistance. I don't need to talk more on this. Or if you check the previous module on technical analysis, probably on the 9 or the 7, 8, we talked about support and resistance and the importance of support and resistance, how price react from support and resistance. So we're going to look at how to mark out high time frame key levels using this information of support and resistance as well. We're also going to consider order block and fair value gap. whenever we are marking out our higher time frame key levels, okay? Because we have, as we discussed on the smart money section of the course, price always reacts from most of the time from fair value gaps coming to fill the balance, inefficiency, or probably reacting from the order block where institutions are looking out to place their bulk order from. So we will mark out the wicks, we'll mark out the order block, and we'll mark out the fair value gap. So I'm going to teach you step by step how to do this the right way, okay? Yeah. So now, understanding wicks. Now, what is a wick? It's an extension from the candle body. Now, if you look closely, you'll find out that um, if you look closely, you'll find out that this is a wick. It's a rejection, show price rejection and failed attempt. So price failing to close below this level is a rejection. Okay, you can see multiple rejections here. These are what we call wick, and this is candle body. So this rejection extension from the candle body is called, on the candle body is called what? Wick. Okay, you can see multiple of them here. So don't worry, we're going to talk about how to correctly mark out these wicks on the chart. Now, the insight we're going to look at this week is that long wicks often precede reversals. Whenever we have this kind of, you can see we have a very long wicks here. And what follows suit? Reversal. Okay. What follows suit was what? Reversal. So they often precede reversals. Okay. After you see them and there's confirmations, probably you're going to see what we call reversals at those zones. Okay. Wicks near support resistance are equal to strong reaction zones. So they are like strong reaction zones. We will have wicks that are close to support and resistance. They are strong reversals or strong reaction zones. Wicks show liquidity hunts and force breakout. Of course, institutions may be trying to push, or smart money be trying to push price into this level to take out stops of retail traders, or take out stops just to liquidate, to grab enough liquidity to push price to the opposite side. So whenever you see this kind of wicks to the opposite side, price moving with momentum all of a sudden pushes all the way up. It could be stop hunts, it could be liquidity grab by the institution player. So these are the things you have to look out for on the chart, okay? But we're gonna, like I said before, I'm going to teach you guys how to correctly mark out these key levels on the chart at the end of this video. Now, let's go to step-by-step guide on how to mark out key levels, okay? Now, looking at this chart right here, okay? Looking at this chart right here, what can you see on the chart? What can you guys see on the chart? What can you guys see on the chart? Okay, what can you guys see on the chart? Okay, what can you guys see on the chart? Now, in a rejection zone, what is a rejection zone? This particular zone, this zone you are seeing here, okay, this zone you are seeing here is called rejection zone. I'm looking at a very huge zone, but you see this zone is called rejection zone. It's a zone that price rejected from and then displaced to the other side. So it's called what? Rejection zone. Okay. So now this rejection zone will map out the candle with the highest, underline this word, highest wick. In that rejection zone, we map out the candle with the highest wick and extend it horizontally to the right. So we map out the candle with the what? Highest wick, and then extend it horizontally to the what? To the right. Okay, in anticipation of future price reaction. It's just that simple. So we look at these zones. This is what we call them what? Rejection zones. So we look at these rejection zones. Okay, we look at these rejection zones. All right, all these zones. What we do is that we do what? We look at these zones and then we map out the candle with the highest wick. We map out the wick of the candle. Now, this candle, if it's the one that has the highest wick, we mark out that wick. That's the one we are mapping out. That is the wick we are mapping out, okay? And extend it horizontally to the what? To the right in anticipation of future price what? Reaction. So I think example will be able to help us to understand it very well. Now, if we look at this rejection zone right here, which candle has the highest wick? This candle, right? So what we do, we map out what? The wick of that candle in anticipation of what? Future price reaction. You can see our price came there after some couple of weeks. It fell to the what? To the downside. So remember that harmonic pattern comes first before all of this. Harmonic pattern comes first before all of this. If we map out our higher time frame key level, okay, all we have to do is to go down to the lower time frame and construct a harmonic setup into that key level. If there is no harmonic setup into that key level, the key level is as good as nothing. Okay, now where the pattern complete is as more important than where the area price is reacting from on the rejection zone. So even if price is reacting from, even if the rejection block ends here, it does not necessarily mean that we'll be looking out for that reversal from here. It depends on which harmonic setup we have into this zone and where the pattern completes. It depends on where the pattern completes into this zone. You see, that is one thing about harmonic. It's a systematic, precise measurement-based approach. So now, because we always anticipate, we have greater percentage of time where harmonic setup reacts from key levels. Okay, so the potential reversal zone, which is the D leg, always aligns with this key level most of the time. It always aligns with these key levels. It always, and those are the kind of setup we are looking at for. Those are the kind of setup we are looking at for. Setups where the potential reversal zone, the D point, aligns with the weekly key level. Now, because this is a measurement-based approach, we are looking for that 0.886, we're looking for that 1.618, we're looking for that 1.13, we're looking for that 1.272 measurement into this level. So it could be here, it could be here, it could be anywhere, but we want price to do what? Text that ratio and give us reaction that it is about to do what? Go the opposite direction. So I'm taking my time to explain this concept so that let it not be that you guys will go mark out key levels and start taking trade from those key levels. No, you don't do it that way. So the probability that you're going to make losses if you do it that way is higher. But if you mark out the key levels and then go down to the lower time frame and construct a harmonic setup into that key level, if it exists, if it does not exist, then the key level is as good as nothing. There is no trading opportunity at that key level. Okay, so that is just how we have to approach this concept. So we mark out the candle with the highest wick. They mark out the wick of that candle. The candle with the highest wick, map out the wick of the candle. Okay, in this instance, I think it should be this one as well. Map out the wick, map out the wick. Same here. You can see at this rejection zone, you can see this candle is the one that has the highest wick, and that was where price came and reacted from. The same thing here. Like I said before, the information you are getting here, you cannot see it on YouTube. You can't see it anywhere. These are based on personal experience, okay? So let's go further as well. Now, the same thing here, you can see our price came here as well. This is at this zone. After this bearish candle, we had the push to the upside. So this candle is the candle with the what? Highest wick. You can see price came there and then reacted from that what? From that level. Reacted from that what? From that level. So we map out the candle at these rejections. You can see that this was a consolidation. Anywhere you see this kind of bearish candle on the higher time frame, on the weekly time frame, and then you see a displacement or an impulsive move to the upside, this becomes a key level. Okay, so if it has a wick, then you map out that wick. Now this comes with practice. You might not really get it at the first time, but if you watch this video, go back to the chart, you'll be able to know how to do all of that. Okay, the same thing here. You can see that this was the same issue, the same concept. This rejection zone. After this bullish candle that gave us rejection, price moved impulsively to the downside. So this is a week. So we anticipate future price reaction as price get to this what key level. So at this key level right now, each candle has the highest week. This bullish candle, right? We map out that week. You can see how price came there and reacted from that level as well. Now, this rejection zone, the same thing here. Which candle has the highest week? This bullish candle. We map out the week of that candle. You can see how price came there as well to react from there. The same thing here. We map out this one in anticipation that price will come to react from there as well. Okay. The same thing here. This was the continuation from the other slide. So this is how we map out key levels in India. You can see at this level as well, which candle has the highest week, this particular one, right? So you map it out as you can see price came there, reacted from there, and all of that. So it comes with practice. It comes with practice. Go back to the chart and then begin to see all of that. So let's go further. The same thing here, you can see at this rejection zone, this candle has the highest week. We map it. I can see how price came there, reacted from there, and then push the downside. Now, this is an order block, okay? Like I said before, it's not only week you are mapping out, you're also mapping out what order block. And see, this is an order block. One candle, second candle with fair value gap, and the third candle. So the first candle is the order block, and price came back to that order block, and it's a bearish candle in the midst of what bullish candle. So price came there and then reacted from that what level and pushed to the upside. Okay. The same thing here. This is an order block as well. Apart from the fact that we have this week, but this is also an order block. Also, price reacted from. So we map out order block, map out fair value gap. Also, you can see this is a fair value gap. Okay, we map out the fair value gap. Post rejection here, right? Then price came back and filled this gap completely. So these are how we map out what key levels. The candle with the highest week, map out the week of that candle, this one as well. Map it out this way in anticipation of future price reaction. So I hope this is making sense to you guys. If you have patience, if you have any issue, we have a lot of examples to show to you guys. Okay. So the same thing here, you can see this at this rejection zone. This bearish candle is the candle with the highest week. So you map it, I can see how price came there and reacted from there. After that, we also had this rejection week as well. Remember what you said before that these are drawn from previous price record. Now, this new week now is drawn from the past. This new rejection zone is drawn from the past record of previous price movement. Okay, so we also have this new one here as well. So we map it out as well. So that is the candle with the highest week. We map out the week of the candle. Okay, the same thing here as well. Okay, so this is the fair value gap we map out before. So this is how you map out your weekly key levels. I hope this video is making sense. I hope you guys are understanding what I'm talking about. Okay, the candle with the highest week in that rejection zone, you map out the week of that candle. So that is how to do that. So the same thing here. Now, this is the question and answer section. Now, I want you to think about this. Now, the candle with the highest wick, is it the one with the red arrow or the one with the black arrow? Let me give you guys like 10 seconds or 20 seconds. Just think about it. Which one? Which one of them? Okay, I'll go with the red one. So the one that has the black arrow, that is the one with the highest wick. That is the one with the highest wick. Okay, so you map it out. You can still choose the one with the red arrow. So they are approximately the same size. They are approximately the same. So in this situation right now, all you have to now do is to map out this one that's engulf this one. Since they are of the same height, the wicks are of the same height, the relative of the same. So you can map out any one, either this one or this one, and map them out. Okay. So let's go further. The Secacia price came back there and reacted from there. So now, of course, this one is obvious. Which candle has the highest wick is this particular one. So what do? You do what? You map it out in this way. You map it out in anticipation of what? price reaction. You can see price also came there. If you map this one out now, you can see that price came there, did not even get to that level. But you can see that the price came to this one. So, like I told you guys, what I'm teaching you cannot be found anywhere. These are secrets. These are secret, top secret. So you are learning something, and that is wonderful. You can see price came back there because you map out the candle with the highest wick. That is what you map out. Price came back there and right there from there. You can see this one is also the candle with what highest wick. The same thing here as well. So if you look at this rejection zone too, which one has the highest wick? This one, right? You map it out. What price did there? Price also came there right there from there. So I hope it's making sense right now. It's making sense. Now there are situations where price may break through the key level. So whenever price breaks through the key level or breaks through a key level, which happens here, we might anticipate price to pull back into that key level and give us a rejection. Continue doing what? Pushing down. And that was what happened here. So it's like a break of support and then price pulling back to retest this level of as what? Resistance. And that was exactly what happened here. So you have to also look at other things. Like I said, the most important thing is harmonic setup into this key level. If we don't have any harmonic setup into this key level, this key level is as good as nothing. It's as good as nothing. So harmonic pattern comes first before any of this. Before any of this, okay? So at this instance, right now, I can see this one becomes the what? The key level, because that is the candle with the highest wick. So it becomes the key level. The same thing here, this one is the key level. So when looking at it, you begin to see how to map out all of this. You begin to see how to map out all of it. The same thing that happened here as well. You can see this was a rejection wick. What happened? Price came, gave us reaction, and then pull back into this rejection wick, and then fell to the downside. Okay, so, and it's pulling back now to retest this level. Okay, so now between this candle and this candle, which one has the highest wick? They are relatively of the same size, right? So but this one engulfs this one, so I'll choose this particular one in anticipation that price will come to react from there. So I hope this video is making sense to you guys. Okay, the same thing, can see how price came back to this level, reacted from here, fell to the downside. So this is a larger picture of the previous slide. This is a larger picture of the previous slide. Okay, so now how do we mark out? The same thing here, you can see this one. If you look at this zone very well, which candle has the highest wick? Is it this one or this one? Now if they are relatively of the same size, you map out the one that engulf this particular one, right? You map it out. So this line is not straight. You have reacted from this one, of course. Can see how price came there, reacted from there. This one is also with the highest wick. Price also came there, reacted from there as well. So that is that. I hope this video is making sense to you guys. I hope you guys are getting enough value from this video, and you do this only on the weekly time frame, not even on the daily or the 4 hour. We use those ones for entry. We use the 4 hour weeks for entry. We use the 4 hour weeks for entry. So one of our entry video on the members area is all about entry on the 4 hour week candle. So we use the same format for the same week we're using here. We use it for entry on the 4 hour time frame. Yeah. So that will be on entry. So this video is specifically on how to draw higher time frame key level. Okay. So when we draw our key level, and then, like I said before, in anticipation of what? Future price reaction into this what? Into this key level. So if you now have a harmonic setup, if you now have what? A harmonic setup into that key level, if you have a harmonic setup into this key level, that is when this key level becomes a high probability level. So now we can actually construct a harmonic setup, probably a bat into that what? Key level. This is a B point. This is X, A, B, C, D leg into that level. So we have what? Weekly key level, harmonic setup into the weekly key level. We'll now look for what? rejection, stop hunt, fake out, breakout, all those kind of rejection, break of resistance, break of support, head and shoulder, all those kind of other stuff based on the entry. We have different entry model we discuss. We have the demand and supply flip. We have the candlestick reversal entry model. We have the order block mitigation entry model. Then we also have the H4 weeks entry model. So which of the entry model that plays out, because price does so many things whenever you want to reverse. It doesn't do one thing at the same time. So it does so many things. So you have to have different entry model for any reaction. So if you see any of those reactions, you know that yes, this is this is the entry that is in play here. Okay. Now we also have this key level as well. You map it out. Also, you can see this was a huge key level. Whenever we see this kind of key level, okay, we just have to mark it out and then see how price eats into this level. You can see keep eating into this level, keep eating into this level to almost 0.8 aces of that level. Depending on how we see this setup, might have what we call a crab pattern into this level, a crab of 1.61618 based on that. I'm trying to jump ahead of myself, but you can see this was a retracement. This could be 0.886. So if we take the Fibonacci level from this level up to this place and have this retracement down into this place, we might get 1.6161 what? 618. So key level 1.618 in anticipation. What do we have? Rejection again, right? Break above the rejection entry. So that is how we map out our higher time frame key levels. Can see all of that in play. The situations also here. Can see price broke through that key level, came back to retest it, but the retest failed. What happened? It closed above it and retested it as well support and pushed to the upside. So these are the things that happen on the chart as well. You can take notice of. So I hope with this few video, you'll be able to understand how to map out key levels on the charts. So let's go to the market and look at how to combine all of this information. Okay, so let's go to the market and see how to combine all of this information. Now, right here, I've been able to map out this. Let me just increase this. I've been able to map out these key levels. Okay, you can see I mapped out this key level and price is almost close to that key level. We also have a lot of key level below. So this is on the weekly time frame. So let's go down to the 4-hour time frame to see if we can be able to get a harmonic setup into that what key level. Let me go back again. Just refresh. And this is 2024. Just go back. Okay, so it's not there. So I think it's past there. Let's go back. Should be this one, if I'm not mistaken. Or is it? Yeah, should be this one. So let me use the replay button and then cut this guy off. I just hope the replay will work right now. Just want to. Okay, even if it doesn't work. So let's look at this. As price was approaching this key level that were mapped out, we have to now look at if we have a harmonic setup into that key level. You can see that from here we have this movement to the upside, right? So let's see if we can be able to get a let's see if we can be able to get a crab into that level. Okay, so let's see. Let us see what is going on. No, we couldn't get that. 1.61618 is above that key level. What about here? Beautiful. Okay, beautiful. So you can see how this is in play right now. Let me increase that for you guys. This level comes around 0.618, which is perfect. And then we have what? The first time price came here. You see the reason why I said harmonic setup is more important than key level as well. Now, price came here. What the price did? Price gave us a reaction. So somebody else, if you're not trading harmonic now, you'll be like, I've missed out on this move. But then the pattern is yet to complete. 1.618 has not been tested. You can see at the test of that 1.618, then a harmonic trader becomes interested. First of all, have this sweep of this high, and then price pushing down. So with this confirmation, you can look out for what? For entry. And that was what happened here. And the price fell to the downside. So you already have your harmonic set up into that what key level, because you've really known how to map out what key level. And then you construct a harmonic setup into that key level if it exists. If there is no harmonic setup into that key level, that key level is as good as nothing. Like I said, it is as good as nothing. Key level comes first before every other thing. Harmonic pattern comes first before every other thing. Okay, I beg your pardon. Now we have a crab, right? We have a crab. Okay, so we have a key level, we have a harmonic setup into that key level, and then we now look out for entry and stop loss. Beauty of harmonics, everything is given to you. Okay, so we have 0.38 to 0.618 and 0.786 as our targets. Look at those targets and see how price will react from there. So this is it. Stop loss 10% distance from the PRZ. Beautiful trading opportunity right there. So at the displacement of this bearish candle, you can look for entry here. Stop loss above this level. Okay. First target was hit after a couple of days. Move your stop loss to break even. 0.618 target was hit. We already have 1:3.48. And then final target at what? 0.786. You can see we had 1:4R, depending on how you place your stop loss. Now, because you have a harmonics, you have a smart money in play here, you may not really put your stop loss over here. You can just adjust it to the few pips here, giving 1:6R, which is beautiful. That is one good thing about harmonic setup. It gives crazy risk to reward. It gives crazy risk to reward if you do it properly. If you do it properly, okay? Now, as price was pushing down, we have to look out for other what key level as well. We have to look out for other key level as well, right? We have to look out for other key level as well. Is this the current price? Today is 5th of May 2025. Let me go down to daily time frame. Let me go down to the daily time frame. Oh, this is supposed to be on replay. I don't know. Probably it's because of network issue. Now, as price was pushing down, we begin to look out for key level as well. Begin to do what? Look out for key levels, and then where price will react from. You can see that we have this fair value gap here as well. Price could as well come to fill this imbalance. This fair value gap will be important to us if there's a harmonic setup into this fair value gap. If there is no harmonic setup into this fair value gap, it is as good as nothing. Okay, so we also have this other block here as well, so you can map it out. But because we have a week, can just map out that week as well. So this is just example of to show you guys how to map out higher time frame key level. You can see at this point in time which candle has the highest week. This candle, right? You map it out in anticipation of what price reaction. Price came back there and reacted. And from the look of things, I think we also had a shark. Look at this. This is a shark, a bearish shark of 0.886. Now we might not really get the price reaction at 0.886, but then provided that stop loss was not hit, this setup still holds. If we measure this extension to the downside, it should be within 1.61, a beautiful 1.61. So this is a shark. Can see from the weekly time frame itself, we have already gotten this setup, and it was a very successful move. We even have a lot of scaling trade here. The first scaling trade was this one, as price corrected back here. Second scaling trade is here. Third one is here, which led us to the final one at this level. Because from this point, we already have what? 0.618 final target, which is which gave us this 5-0 pattern to the upside. So I'm trying to jump ahead of myself. Sorry about that, guys. But key level is very, very important. If you know how to do key level, if you know how to map it out, watching this video over and over again, go back to the chart and begin to map out key levels. And then come down to the lower time frame and see if you have a harmony set up into that key level based on this example I'm giving to you guys. So practice makes perfect. If you practice it, repeat it every day, you begin to see all of these things in play on the chart. So I wish you guys all the best. Remember that you are getting sound and quality education from this channel, from this this video is going to be available to the public and also going to be available to the students as well. So the only video that we don't release to the public is the harmonic pattern video, because it requires in-depth study. It requires somebody to hold you by the hand and teach you how to measure these patterns and how to be able to identify them on the chart. So it's something that requires a mentorship. It requires somebody to hold you and teach you very well. So, but other videos on general videos on trading and all of this information can be put out to the public so that everybody can be able to have an idea of how to do it and do it the right way. So I wish you guys all the best and hope you gain value from this video. And this will be all for now. And see you guys on the next video. Till then, bye for now, guys.